Tony Davidow, what are smart or strategic beta funds, and why is now a good time to own one?
Well, I could probably answer it's always a good time to own them, but it is a great question because they've certainly grown in interest and complexity over the last several years. So smart beta, or I think Morningstar has begun to categorize them as strategic beta, are strategies that are non-price weighted or non-dependent on the biggest companies driving most of the returns in an underlying index.
So should I throw out my S&P 500 market cap weighted funds and just go to smart beta, or is there a place for my S&P 500 index fund?
You know, our view is there's a role for both, and clearly a market cap portfolio will have its day in the sun, and there will be periods of time it's a better way of getting exposure to the market. And there are periods of time, and over extended periods of time, part of the appeal of these strategies is they have historically delivered excess return. We actually believe the combination of the two provides a more durable portfolio, and you're less dependent on large individual companies driving a lot of the returns.
Well, speaking of large individual companies, Apple is now in the Dow, so should I get into the Dow, buy a diamond maybe?
I'm not sure, I'm not making a call on that, but I would say that it's certainly interesting to watch because we know for many, many years Apple was the largest name in the S&P 500 and the Russell 1000, and the performance of the underlying index was largely dependent on how well Apple did over time. And in fact, when you overweighted Apple, you likely did well, and when you underweighted Apple, you likely lagged.
Can you give me some of the varieties of smart beta funds? And also, I want to find out whether or not they're cheaper, because there's a little bit more than just going with a market cap weighted index.
Yeah, so it's great. Morningstar has begun to introduce a new taxonomy. They do use the term strategic beta, and they define these very broadly. So some of the most popular strategies in the marketplace are something as simple as equal weighting, taking the S&P 500 and equal weighting it. Fundamental strategies, which probably have the largest following, and Rob Arnott in his research probably has the richest history. Those strategies go back 10 years. Rob celebrating 10 years of real-life experience this year, as a matter of fact. But then you have strategies like low vol, momentum, and by categorizing them, what I think it allows investors to do is to distinguish between them, because they're not all created equally. Although they're often called smart beta or strategic beta, they're actually quite different.
But in the end, aren't you going to compare them to the S&P 500 because they're so specialized, they're so individualized? You need some benchmark for these, I guess, smart benchmarks.
I think that that's fair. I think that that's fair. I mean, you are comparing them to the S&P 500 market cap weighted, which is a market proxy. But I think for individual investors and for advisors broadly, now you have different ways of getting exposure to the market. And if you really understood the construction, you'd have a much better sense of which strategy will do well in which market environment.
All right, thanks a lot, Tony.
Great to see you.
Thank you for watching The Street.